Understanding China has become more difficult than ever, yet also more important than ever. Whether the U.S. and China are rivals, partners, or a mix of both, effective policy will only be as good as the information on which it is based. My name is Scott Kennedy, and I'm the Senior Advisor and Trustee Chair in Chinese Business and Economics at the Center for Strategic and International Studies. I also have had the privilege of being one of the few American scholars who has traveled back and forth between Washington and Beijing in recent years. I'm a firm believer that field research, direct observation, talking, and listening to Chinese perspectives must be a part of our toolkit to understand the People's Republic of China. So join me as I speak with Chinese leaders from business, government, and academia, and foreigners who have spent many years living and working in China. What makes China tick? Where is the country going? What connects us? And what divides us? We'll dive into all of that and more on this podcast. Welcome to China Field Notes. Veronica, welcome to our podcast, China Field Notes. It's great to have you with us.
Thank you for having me.
I wanted to first introduce everyone to you, or have you introduce yourself, because I think your personal story is reflective of how connected the U.S. and China are with each other, not at the geostrategic level or at the corporate level, but at the human level. Because you were born in China, you moved to the U.S. when you were quite young, and now you work in an area in which is central to the relationship. Tell us a little bit about your pathway to the United States and how you ended up working for Primavera, this investment firm that bridges the two countries.
Yeah, absolutely, Scott. You're totally right. I think my story is, I would say, one that's very emblematic of many in the U.S., which is an immigrant story. I grew up in Guangzhou, China, just across from Hong Kong on the mainland. I had the opportunity, because my parents had jobs in the U.S., for me to move at the age of 8 to the U.S. It was amazing to have had the opportunity to do so. I had to learn English very quickly, got thrown into elementary school right away, just picked it up. And this was in Los Angeles. That's where we were at the time. I grew up in the U.S. Again, I think for many first-generation immigrant families, it's a very similar story. I had incredibly hardworking parents, wanted to give me every opportunity. I studied very hard. That was a non-negotiable. I also had a passion for sports. So my parents really supported that. And I got into tennis after I came to the U.S., ended up playing on the professional tour throughout high school. So was really traveling across Asia, Europe, South America, North America, 10 months a year through high school, and managed to get a high school education through an online education program, which I think is quite unique to the US, and was able to get a full scholarship to Stanford to play tennis, which I represented for the 4 years that I was there as an undergrad. So it is very much, in my mind, my parents' story and their drive and their support of me as immigrant parents. I certainly don't think it was easy for them moving to the US, and I'm very lucky to have had the opportunity.
That's just really amazing. I didn't know about your tennis background and everything. And you could have just ended up being a professional tennis player for your entire career. Instead, also, you moved into business and you used your Stanford education in another way. How did you shift to get interested in business and working on helping identify companies, helping them grow in these areas?
Both my parents were educators, and they were also entrepreneurs. So they built their own education businesses. I think I was very much inspired by that. I had the opportunity when I was doing my master's at Stanford to take a number of courses at the Stanford Design School, which really focuses on innovation and entrepreneurship and how to foster that in a learning environment. After that, after I graduated, I had the opportunity to go back to China and incidentally met several educators in China who were pursuing this mission of how do we reform the Chinese education system and adapt some of these Western education principles in order to better prepare the Chinese youth for this next generation right? One that is fueled by innovation and technology and the services sector, as opposed to your traditional manufacturing industry that have fueled China's growth in the past. So this was in the 2010s, and China was incredibly open and also overall supportive of education reform. And I found that to be a great opportunity after graduating to come back to China and to help start an education business. And so for a number of years, I, along with several co-founders, built a education program focused on creativity and innovation and entrepreneurship for the K through 12 industry. And we ended up working with many school districts and tens of thousands of students and teachers across China. It was during this experience where I had the good fortune to run into the founder of Primavera, Fred Hu, who is an incredible entrepreneur himself in building Primavera, but also a big supporter of young entrepreneurs throughout China. And so after meeting Fred, he convinced me to join Primavera. He described it as a platform that was helping entrepreneurs all over China, but also all over the Asia Pacific region to adopt best practices that are learned globally and to be able to innovate within the Chinese economy to provide better services, products, innovations to the Chinese citizen. So I was honestly incredibly inspired by the mission and felt like it was a space that I wanted to contribute to. I ended up joining Primavera because of that.
Terrific. For our audience who is generally familiar with U.S. China relations and business in different industries and some large investment banks and a couple private equity firms, give everyone a snapshot of Primavera in terms of sort of its mission. Also, where is its headquarters and where is it registered? And give people a little context in which to understand this entrepreneurial company that you joined.
Yeah, absolutely. Vera Capital is a Pan-Pacific investment firm founded by a number of former key executives at Goldman Sachs who believed that there was a lot of room and growth and maturity needed in the overall financial space in China. Investment is not a very mature space, and saw that there were a number of best practices from Western firms that could be applied in the Chinese economy, and built Primavera, founded in 2010, to be this sort of platform that could bring these best investment practices over to Asia and over to China, and to be able to also invest in brilliant entrepreneurs and great companies that they believed could be bedrocks of the growth of a middle class of Chinese citizens. So invest a lot in areas like healthcare, consumer, financial services, education, et cetera. All areas that were and are continuing to be rapid growth areas within the Chinese economy.
Sure. Well, that's helpful to know. Thank you for that. In Washington, we're of two minds about the Chinese economy, often at the exact same time. China is growing rapidly, becoming a tech superpower in a whole variety of industries, from electric vehicles to internet firms to semiconductors, telecom equipment. At the same time, people think that China's economic development model, governance, industrial policy is weighing down the country with so much debt that's got demographic problems, other structural issues that mean that growth is going to continue to slow dramatically. And so we've got both of those in our heads, again, often at the same time. What's your picture of the Chinese economy? Is it this combination of contradictions? Do you have a clear idea of the direction it's heading?
I tend to agree with you, Scott, and I don't think there's a contradiction there. I think both ideas can be coexisting at the same time. And so China has grown at 9% on average over the past 4 decades or so. That's an incredibly fast pace. The US, as a mature economy, has grown at about 3% over that same time period. It is a very natural transition for an economy that is maturing to transition into a much more maybe stable, sustainable growth path of, say, 3 to 4% or 5% growth. And so there certainly is and will continue to be, I believe, this transition as the economy begins to mature, as the middle class has grown and stabilized, for that to be the case. I do still think that, at the same time, there are these incredibly high growth sectors within China, which I think partly due to some very good long term planning have been drivers of China's leadership in these areas. You mentioned electric vehicles. I would say that the broader context of climate technologies and renewable energy is one where China has heavily invested over the last 10, 15 years and has really become a global industry leader. You look at solar panels, you look at wind energy, hydrogen, again, electric vehicles, and batteries, of course. These are areas where China has really innovated. And it is certainly, I believe, in a fairly market leading position today. And I would add to that I think that, specifically within this field of renewable energy, I mean, we all know that the goal of getting to carbon net zero is not one that can be accomplished by one country or two countries, but really is going to be a team effort globally. And so I do think that China has a lot to offer to a lot of other countries, especially including the US, for which now that has become a priority to be able to very quickly accelerate and adopt some of the best and newest technologies out there to help these countries more quickly get to net zero.
I travel to China a lot and I visit companies in a variety of different sectors, including the ones that you just mentioned. And I'm impressed by the different entrepreneurs, by their technology. I'm a sucker for a factory tour, I got to tell you. I'm not an investor. I'm an outsider. I put no money down on this. China now has 150 EV makers. It's got a dozen or two battery makers, a lot of companies in these different industries. And so how do you go about deciding which companies to invest in? Is it the sector that's growing and it really doesn't matter which company because all boats rise with the rising tide? Or is it about the person, the business model, political connections? What's the steps you go through to figure out where are the right places to make investments?
It really is a combination of a top down and a bottoms up approach. So we do start top down. What are the large macro trends that we want to be investing behind for the next 5 to 10 years? So in this case, sticking with climate technologies, we know that the world is becoming increasingly electrified. We know that renewable energies will play an increasingly larger role. And so our thesis starts there. Within that, where can we as a private investor play an important role? Then we look at the places where we historically understand best. So when it comes to China, we've had a lot of experience with consumer related investments. Consumer drives north of 50% of the Chinese economy. We know that, and it will continue to do so. And so we look at where are some intersections of these macro trends and the areas where we have expertise, like consumer. In the space of climate, our first investments were in electric vehicle companies, simply because of that intersection that we talked about. Then within the electric vehicle space, we look at what are the stages in which we can participate based on, again, our expertise and on our growth fund. We tend to invest at the later private stages as well as pre-IPO stages. So we look for companies and narrow that down by stage. And then we really do try to be incredibly diligent and speak and have the opportunity to interact with every single player within that context. We have spoken with every single electric vehicle player before deciding where to place our bets. And it is really a combination at that point of a very bottoms up approach of who are the founders, what is their track record, does the business model actually make sense with subsidies, without subsidies. We cannot rely on that. And then for spaces like this where there is heavy capital expenditures needed, that economic model is absolutely critical. You will be investing a lot of cash up front before you see the returns of that. And so the ability of the company to manage that ROI and then also raise more money in the future, which it absolutely needs as it grows, are all critical factors in that calculation.
That makes total sense. That sounds very systematic. Could you give us an example of a case or two where you used that planning process to make an investment and things worked out well? I'd love to hear what this looks like in practice.
Yeah, absolutely. Sticking again with this topic of electric vehicles, one of our first investments was in a company called XPeng, which is currently publicly traded. It is one of the emerging but also leading Chinese EV players on the market. We invested in them back in that 2018 to 2019 period of time. At that time, we could see this wave of electrification happening. We could see that electric vehicles had gotten to a point where they were technologically and from a user experience point of view already equivalent with internal combustion engine vehicles. We knew that they would at some point surpass them. We could see that technological trajectory as well. So it was for us a very good time to invest. For Xpeng itself, it was also a pre-IPO investment, which was perfect for us. And we had the opportunity to meet the founder who had prior experience working at the major auto companies in Guangzhou and really led a lot of the electric vehicle development efforts for large Chinese OEMs. So we knew he had a track record there. Xpeng also had a vision that they wanted to first focus on the middle class market for electric vehicles, which we knew at the time was underpenetrated and very, very large. Electric vehicles in China at the time tended to be sort of a barbell. There were a number of very inexpensive, somewhat low quality players, and there were several extremely high end players as well, Tesla being one of them. And so we're backing the company, we were backing the founder, we were backing the business model, and then we also were backing this underpenetrated market that we knew and we believed would be growing. So I think that was and continues to be a very successful investment for us.
Well, that intersection of all of those things that you described in terms of the process you go through with Xpeng being from your hometown, I think that also adds to it as well. In EVs, one of the things that I've noticed is it's a very quickly growing market, right? In China and elsewhere, every element of the supply chain. But it's very difficult for companies, most of them, to make a profit. What is the sort of long-term trajectory of this industry? Is it about reducing production costs and then just eventually shifting from internal combustion engines to electric vehicles across the board? Because I think that is the big question for companies that are already in or auto companies that are thinking about getting into electric vehicles.
Yeah, I think one interesting thing about electric vehicles is they are in many ways much easier to make and to manufacture than internal combustion engine vehicles. There are many less parts. The capital expenditure to set up a factory is much lower, and the ROI on that can be much less. At the same time, it is something that requires scale in order to see the numbers work. And so most companies are still at the very beginnings of that journey, including a lot of the US OEM makers. And so I do think this is going to be a question of time as to when all of that is at a scale where the profitability and the stability of that industry begins to take hold. So I don't think there's anything fundamentally off with the actual economic model of EVs. I think, in fact, that's quite a powerful positive.
I guess one thing that people have noticed about companies in China is that even though they are growing and potentially making profits, that the pathway for a private company to list has become more challenging, in part because China has slowed down and for a while even halted new IPOs, and listing abroad has also been challenging as well. What is the pathway to exit for investments look like now? Where do you think that's going?
The last 2 years, that has been a global problem. IPO markets have been challenging in the US and Europe, as well as in Asia. I don't think it's a uniquely Chinese problem. I will say that we are seeing silver linings there. Zeekr, which is a high-end subsidiary of China's Geely automaker, which also owns Volvo, was just recently listed last week in a very strong IPO outcome. They're currently trading about 30% above their IPO price, which is great to see. I think that there will continue to be more IPOs as I think the US and other IPO markets open up for Chinese companies to have the opportunity to list and to see some liquidity. I know Chinese Regulatory Commission last year approved about, I believe it was 72 or 73 applications for overseas IPO listings of Chinese companies. That seems to be a trend where they are open to accepting and to approving more and more applications over time, because I do think that they recognize the value and the importance of enabling for Chinese companies to have liquidity and for investors to have liquidity. So we're seeing that as a pathway. As hopefully US markets open up more later this year, we'll see more opportunities for that.
Well, we're now in the spring of 2024, but U.S. China relations seem to be in the winter time. And the Biden administration recently imposed new tariffs against China in some of the sectors that you've mentioned. And they've taken other actions as well against some firms, and the U.S. Congress has stepped in as well. So we've seen tariffs against EVs. Congress passed this law and the president signed it regarding TikTok. The administration is looking at Chinese pharmaceutical companies. As you mentioned, some of Primavera's investments are in these spaces with Xpeng, ByteDance, some of the Chinese pharma companies that are doing well and have growth potential. How do you do the math or the calculus on the potential effects of U.S. China tensions in deciding where to invest? Do you hope against hope? Is that a big factor in deciding what to do? Just curious, because you have to have a real tolerance for risk in some of these industries where the U.S. and China are butting heads.
First of all, I would just say that I'm still a firm believer in strategic cooperation between U.S. and China being much, much better for both countries than strategic competition. Both countries have benefited tremendously from a positive relationship over the past 2 decades. The U.S. consumer has benefited tremendously from access to Chinese goods. I think many U.S. consumers don't know this, but over 50% of the top sellers on Amazon are Chinese sellers. And their access and ability to purchase extremely high quality, inexpensive goods, I think very few can argue that that's a bad thing for the U.S. economy or the U.S. consumer. I overall firmly believe that it would be a much more beneficial thing for both countries if we can continue to find areas of cooperation. I know that will be what is most beneficial for just the average citizen of both countries. In terms of the context in which Primavera invests, look, we've always been laser focused on instilling best practices and processes in our investments. And we have not changed that throughout different political periods. And so we very much believe that the US system is one that is embedded in the rule of law. That is something that, as long as we continue to adopt best practices and execute in a way that is transparent and fair and according to the rule of law, that rationality will prevail. There's certainly always political changes in the air, which are hard to predict, certainly, with different administrations. But we know that we can be responsible for our own actions, and we have 100% confidence that we're acting in accordance with the rule of law. And so we continue to do investments in both spaces. We continue to believe that it is incredibly important for there to be investment and business bilaterally. These ties and these links are valuable to both sides. And we continue to believe that we should be, a player who is able to contribute to bilateral cooperation and relations.
If you're looking ahead a few years, we'll see where U.S.-China relations goes. But since you look at business and these mega trends, where do you think down the road, whether it's from Primavera or others, that the world should be paying attention to technological evolutions and how markets are going to change? Is it generative AI? Is it medicine? Is it quantum? What are the most exciting things, irrespective of any specific investment, where you get most excited looking at?
I may be a little bit biased, Scott. I sit out here in the San Francisco Bay Area, and so I can't help but be surrounded by all the ways in which generative AI has potential to transform the world and be a part of those conversations on a daily basis. So yeah, I think number one, I do think that will be an incredibly important space. We are only seeing the very early innings of this impact. I think similar to the internet, I think we're in kind of the pre-Yahoo MSN days. So we'll have to see over the next 5 to 10 years how our lives change because of it. I do think that productivity gains are going to be enormous across a number of different industries. So I'm excited for that. I think climate technologies continues to be an area where there's a lot of continued innovation and acceleration. We're seeing the ability of longer life, stronger cycle time, batteries, be able to electrify our grids. I think that's a wonderful thing. We're seeing renewable energy play a much more important role there in a way that is economically feasible, and that's incredibly important. And we're also seeing across a number of other really important industries, such as healthcare, the role of innovation and technology playing a more important role. In areas such as biotech, drug discovery, we're seeing just tremendous change and improvements to people's livelihoods because of that. So those are a few areas where I'm particularly excited about for innovation technology to just make people's lives better.
I encountered some of the same industries when I've been traveling in China recently. And to bring this a little full circle, I had a dinner with a set of Chinese AI entrepreneurs when I was last there. And it was co-organized, this dinner, with the Stanford Graduate School of Business. Why? Because most of these entrepreneurs went to Stanford. Most of them are bicontinental, maybe born in China or born in the US, but family in both sides, education, lives in both sides. The connectivity is amazing. At the same time, everyone is also recognizing that there are these geostrategic challenges with both Beijing and Washington and other capitals very risk averse, trying to take all of these different steps to reduce their dependencies on the other, which clash with some of the efforts for folks to achieve innovation as fast as possible. It's a really complex environment that doesn't easily fit into standard categories. But I think what you're doing, your story and Primavera speaks to the complexity of this world, of the opportunities and the challenges. And I'm really impressed by your efforts to try and navigate this in a way that does as much good as possible. And really appreciate the time that you've spent with us on the show to discuss this. I'm wondering if you have any closing thoughts that you wanted to share with everyone about Primavera or the kind of things that you're working on or how the world looks from where you sit.
No, Scott, I think we really covered it all. And my parting words would be to say, please do more podcasts. I think your platform is a wonderful one and one in which is very desperately needed in Washington. So thank you so much for all that you do to help foster awareness and transparency and more knowledge on both sides. So really appreciate you having me on.
Thanks so much, Veronica. Great talking to you. Let's continue the conversation.
Thank you, Scott.
Thanks for listening to China Field Notes. Stay up to date with our latest releases by following us on Spotify, Apple Podcasts, or wherever you listen to great content. Until next time,